Testing, testing, 1, 2, 3. Thought I changed that thumbnail. Alright, I'm live on my new channel. I believe we're live on Dlive as well. Let me see, it doesn't say I'm live. Start sending your video streaming software. Alright, well, we're live, so I guess I just have to turn off my stream via OBS. Alright, that's cool. So let me just check Dlive. Let's make sure everything is going well. This is a brand new channel. I really don't know if I've ever been live on this before. What's up, mushrooms? Let me check Dlive here. Okay, cool. We're live on Dlive. Drippy on Dlive says, "You were on to something big. What happened?" I found the stock market and became obsessed with trading and making money. So that's pretty much, that's pretty much my main priority these days. So we're definitely going to, fundamentally change the direction of the content, but it's going to be good. I've got a lot of good stuff for you guys today. Let me actually post my live stream in my Discord. So you can view this on Dlive or Periscope. You can watch this either on YouTube, Dlive, Periscope. And let me just close my door over here. Okay, so thank you for the likes, guys. We're going to get right into this. I want to go through some news first. That's the first thing that we are going to do. And then we're going to take a look at the charts, obviously. Let me turn off time and sales. Let me just do a few things here real quick. We're going to look over the charts, talk about the markets, talk about some of the stocks I'm looking at, talk about some of the trades I plan on taking. We might go over a couple of trades from this week and, just generally where I feel like the markets are headed. We got Zaka. What's going on? Welcome to the chat. Thanks for joining. So, before we get into all that, let's go through some news, some macroeconomics, look at the macro picture. I've got a couple of interesting stories here. One dude lost $500,000 basically betting against the Fed back in March. We'll go through that story because I think there's a lesson to be learned there. I do want to share with you guys my Twitter. I'm on Twitter at Marlo_. It's Marlo_Charles. I almost said Cremitas. We've also got the blog. Uploaded a brand new blog today. It's basically today's show notes. And we'll be talking about the news with Apple and Facebook and all that good stuff. So let's talk about what the broader picture looks like, okay? Airlines and cruise lines are going to be an indicator. We're basically using those industries and those sectors as an indicator of what the greater economic health really looks like. So we need to monitor those industries for clues as to what may happen in the broader sense, okay? So airlines and cruise stocks, they're basically on the pulse of the global economy's health. In the future, probably in the not too distant future, airlines are going to be nationalized. So that basically means the government's going to buy them out. And it makes sense, right? I mean, there's a lot of commenters that I'm subscribed to on YouTube who are saying this. And especially when you think about the pandemic, right? And the new regulations that will be coming regarding travel and the vax, a nationalized airline system owned and controlled by the government, it just sort of makes sense, right? So hotels and restaurants, that's another sector that we really want to be paying attention to. Apple at 105 tomorrow, definitely possible, right? I think we're going to see probably 100, maybe 101. We're going to talk about that for sure. I'm going to do a deep dive into Apple a little bit later on. For hotels and restaurants, though, they're going to continue to suffer until we're reopened for business, right? Without restrictions. Until that happens, the economy is going to continue to decline. All right, so that I really think that I want to drive that point home. I'm not trying to be pessimistic or bearish about the economy, but until we reopen without the restrictions, without the face mask, without the social distancing, without the tracking and tracing. I mean, I got to sign up to go everywhere. I got to sign up in advance to go to church. I got to sign up in advance to go to the gym. I mean, this is crazy, and I don't even know if that's ever gonna go away, right? But until we reopen for business, without the restrictions, the economy is going to continue to decline. So let's talk about real estate. Okay. I'm investing in some REITs, big hospital REITs like NPW, though NPW had a big drop today. I see it as this week, I should say, it had a big drop. I see it as a big buying opportunity. And then you also have like digital REITs, like Google's servers need to be stored somewhere. So Iron Mountain, ticker symbol IRM. Those are some of the REITs that I'm investing in. But we have basically two sides to this, right? You have the residential real estate, and then you have the commercial real estate. Residential real estate will probably be okay for now. I know people talk about a looming housing crisis, and we've got the mortgage forbearance stuff and the rent forbearance that we need to keep our eye on. But overall, I think residential real estate may be okay for now. Many people are going to downsize, especially the millennials. And when you think about millennials that work in the service industry, right? I mean, that industry has been decimated. So those folks will definitely be downsizing. When we think about commercial real estate, that sector is going to suffer, all right? And especially in the metropolitan areas that are affected by the pandemic, the riots, the new crime wave. If you think back to earlier this year, back in March, all right, I have actually got an article about this. This came out March 13th, all right? It was right around the time when the pandemic was hitting us. Carl Icahn, who is a very famous investor, one of the elites, I guess we could call him, he actually revealed that he was shorting the commercial real estate market, okay? Now, when this news came out, it was already kind of old. He had probably taken his short positions or his put options or whatever back in January and February. So when you see this kind of news about some like elite famous investor and what they did, it's always like a month or two old. Like every time they come out with like, oh, Warren Buffett bought $500 billion worth of Apple or something, that news is like a month or two old, if not more. But Carl Icahn shorting the commercial real estate market back in March, or at least the news coming out, in hindsight, it really makes sense why he did something like that, right? So I guess the point is that, we need to follow the elite investors and traders, follow what they're doing. Shorting commercial real estate, in hindsight, it makes a lot of sense. And you can see that, these people who know what's going to happen before it really happens, they're making a lot of money off of, the controlled demolition that we're kind of seeing throughout the global economy. And, especially commercial real estate, when you think about how heavily it's being affected by the government response to CV, I think there's going to be, in the metropolitan areas as well, like especially, it's going to be very, very, very serious for that sector. So now some other serious macroeconomic, situations to consider is the China relations, okay? America is in a cold war with China. It's not exactly spelled out that way. And, instead of the race towards building nukes, right, like it was in the 60s and 70s with Russia, and instead of the atomic threat, this is a cold war. It's a race towards cybersecurity, tech, big tech, and most importantly, big data. Big data is basically the new gold, all right? Moving into the future. So companies like Amazon, Google, Apple, Facebook, even fintech companies like PayPal and Square, etc. These are the companies of the future. Apple has had a huge market correction the last couple of days. All right. In my mind, that's a good thing, because when you think about how much Apple is going to change the world, you think about how much Amazon has already changed the world. These companies are going to continue to build the world, for better or for worse, kind of in their image, the way they want to. And those are the winners, right? I mean, if you're picking these companies to invest in, the way I see it is, you're basically, how can you go wrong? Now, that being said, there was a little bit of drama the last couple of weeks with the TikTok deal. Shout out to Newly Awakened. Welcome. We got Ella Sketches. What's up, Ella? Aquarius, thank you for joining. It's good to see everyone. The TikTok deal, that was a lot of drama, but a lot of what that was about, and basically the stalling of the TikTok deal, was about Trump sort of putting his foot down and, trying to set the rules with China. China basically pretended that they wanted to sell TikTok to America, and then they turn around and, this is what China does. They pretend, they sort of play dumb, pretend they didn't know there was a misunderstanding, and they say, oh, no, we wanted to partner with the U.S. So TikTok, I guess, is partnering with a company called Oracle. The point is that this really highlights how much data is really, how central it is to the new economy. The TikTok deal had a lot to do with data and who gets access to American data. Trump has approved the TikTok Oracle deal, which was kind of a big loss for Microsoft in the short term. Microsoft, the ticker symbol MSFT, they were even trading below 200. Let me see if I can find this real quick. They were trading below 200. Yeah, they blasted through that demand zone I had plotted there. If I go to a 5-minute chart, they were trading at like 96. So it's been a while since we've seen Microsoft under 200. You can kind of see, I don't want to call it a fall from grace, but that was, I think, a little bit of a bigger correction even than Apple or some of these other stocks. I don't usually trade Microsoft, and I'm not invested in them as of now. But you think about how Microsoft didn't get the TikTok deal. That means Microsoft does not have access to that data and that information right now, and they kind of lose out on making headway in the consumer tech, right? The social media, because Microsoft's not really known for the social media. They're more like cloud computing and stuff like that. So it's kind of a missed opportunity in the short term. But in the long term, for Microsoft, they're not going to have to deal with some of the problems that consumer tech often has to deal with, where Facebook and Twitter and Google, they're kind of sometimes dragged before Congress to answer questions and stuff like that, and they have to kind of answer to some of these committees, congressional hearings and stuff. Microsoft, in the long term, won't have to deal with that when it comes to the consumer tech issues of censorship and all that. Okay, so another real huge thing that's coming up, obviously, is the election. No matter who wins, it's going to be crazy. It's going to be absolutely insane. Now, there's a lot of propaganda out there saying that, Biden is going to make the stock market boom, right? If we can only elect Biden, the stock market is going to take off. This is a Wall Street Journal opinion piece. get ready for the Biden stock boom, the headline reads. So you're going to see a lot of this kind of propaganda and these kind of pieces here. Biden and Harris, they're going to raise taxes. They're going to raise the corporate gains tax. And a lot of the big investors and the elite shareholders, a lot of them are leftists, right? Let's just put it out there like that. It's kind of an interesting situation they're in because, you know, the better the stock market does and the better these companies and their share price do right now, it actually plays into the current president's hands. So it's like the companies that are benefiting right now, that's actually benefiting Trump, and they don't want that, right? A lot of these big companies and these CEOs, they want Biden. So we'll have to see how that plays out. But, you know, you think about the election, and no matter who ends up becoming the president, the markets are really going to be more affected by what the Fed does and what the Fed does in collaboration with the current administration and whoever ends up getting into the Oval Office later on in November, or I should say next year. So what do we do, right? What do we do as, I guess, in an investing, you know, finding an investing thesis or a bias or, you know, thinking about it in the long term and, you know, our entries and stuff. I think between now and December, there's either two things that could happen. The markets could rally or they could crash. I think there's too much going on in the world right now, too many influences on the, you know, macroeconomic landscape for the stocks to really trade sideways. I think they're either going to rally or they're going to crash. I personally, I will disclose this. I have October calls on Apple and I have November calls on ExxonMobil. I do want to talk more about ExxonMobil, maybe not in this podcast, but I'm bullish on oil and I'm bullish on ExxonMobil. I'm bullish on Chevron. The way I see it is, you know, I don't care what they say about solar energy or batteries and electric cars and all this kind of thing. You know, it's not that those aren't good new emerging industries to maybe, you know, think about investing in, but the way I see it is, at least for the next 1,000 years, there is going to be no way you can run a global economy without oil. So the big question is, though, where is the Fed going to take us? All right. The eternal bears out there, I think they really should be thinking to themselves, you know, do I want to bet against the Fed? You know, is the Fed going to continue to let us correct? Is the Fed going to let us, you know, go to the March lows, right? This is definitely a huge question that we should all be trying to figure out. And so, you know, just to kind of show you an example of what betting against the Fed could do, there's a channel called Stock Market Lab and a guy named Umar, all right? And this guy's channel is fantastic. He offers a lot of great information. He does a lot of really great interviews with traders and investors and stuff. But he shared a personal story a couple of days ago. He uploaded this video, how I lost $500K trading in one trade. And he essentially talks about how in March, right, after the markets had already sort of hit, you know, these March lows, he was biased. He had a bearish bias, and he thought the markets were going to go lower, right? We had all the news about the stimulus and the Fed. You know, Jerome Powell was coming out saying they were going to support the economy. But, you know, Umar actually bought puts. He took the short side. But when I say the short side, I don't necessarily mean shorting stock. When I say that, it's also like maybe you're buying put options, right? But he bought puts, I guess 500K worth of puts, you know, on I think the SPY and some other stocks and stuff. Well, make a long story short, you know, we were already at the lows, and he said he held these positions until like late March, you know, April, and the market never did go lower, right? And he finally had to cut his losses, and he lost like $500,000. So that's sort of, I hope that highlights to you how dangerous it is to bet against the Fed. We should be, our market bias should be based on what the Fed is going to do. And, if we're influenced to trade in a certain way, we better, if we have a certain bias, we better damn be sure that the Fed is heading in that direction as well. So, my main point is, do not go against the Fed. If you're investing, especially if you're investing, but also if you're trading, swing trading, day trading, do not go against the Fed. All right. We have to pay attention to what Powell says. And, another good source of information, especially when in context of the Fed and Jerome Powell and everything he's saying and how it affects the economy, would be Peter Schiff's channel from Schiff Gold. Now, he is, he's bearish on the dollar. He's an eternal dollar bear. He's an eternal stock market bear, because he's hawking gold, right? So obviously he has a bias, and obviously he's trying to sell gold, but he has been very critical of the Fed and its choice to intervene in the stock and bond markets. And he makes this brilliant comparison between the stimulus injections to drugs, right? He calls it monetary heroin that, our economy and the global economy and markets are now addicted to. When we're thinking about the stimulus programs, maybe a new stimulus program to come, maybe more stimulus checks, the Republicans, Democrats, they've been kind of, arguing about this for months, but the Republicans have come up to the Democrats and agreed to $1.5 trillion in relief. So we may end up getting another stimulus check in October. But remember, if you choose to buy stocks with that money, just think about who is providing that liquidity to you. And remember not to bet against the Fed. It makes sense to me that we would have a major market correction like this, right? I mean, this is major. This is not like anything we've seen before. Besides the March crash, this is like the second biggest correction that we've seen so far, right? This is the SPY, the S&P 500, the spiders. This is a very big correction, but it makes sense to me that, they would kind of correct the markets first before they hand out dollars to invest, right? They're not going to give us the investment money before a correction. They're going to correct the markets. They're going to crash the markets. Then they're going to give everybody stimulus money. And when the markets start going back up and we start reaching all-time highs, then everybody's stimulus checks come in the mail and they put that in the market. Think about who is providing liquidity to you. So, you'd probably be better off holding that $1,200. Let's say let's say it was $1,200, maybe you're still working, maybe, you're living with friends and family, you're not, destitute right now, and you can save that money and you want to invest it, right? You would probably be better off waiting until the next big market correction or crash, as to ensure that you're not buying at the tops in October through December. So be careful. Don't make it easy for the institutions and, the elite to profit off of you. And if you are going to day trade with the stimulus money, which is what I plan on doing if we got stimulus checks, make sure you study and know what the fuck you are doing. I shouldn't say that word, but, I can't stress this enough. Learn about supply and demand zones before taking your first trade. Patterns are cool, so are indicators, but markets move off of supply and demand. And also watch the VIX and the VXN, right? For those of you that don't know, the VIX is a basically like an S&P counter index where, like, if the S&P is going down, the VIX is going up. and you see how it's a volatility index, right? And this was like March, right? You can see this was like late February to like the end of March, right? March 16th. You can see how the VIX went way up. And the S&P 500 and the Dow and the NASDAQ, they all pulled back. And the VIX went way up. Well, I want to fast forward to the last couple of weeks, right? This is August 27th. Things started picking up. And you can see we got a huge spike, right? This is that market correction that we just experienced the last couple of weeks. And when the VIX goes above 26, that's a huge sign that we're entering a bearish market, that there's going to be a lot of volatility, that institutions are piling out of these stocks. Well, it looks like, to me, that moment has already come to pass. The VIX has kind of calmed down a little bit. In fact, I think the VIX is now below 26. Yeah, it closed below 26. Which, that's a good sign that we're re-entering a rally-ish, kind of bullish market. But pay attention to the VIX, right? If you're day trading, pay attention to the VIX, right? I'll show you on a 5-minute chart. I always have the VIX right down here. I don't know if you guys can see that, but I've got the VIX right down there in the corner. You can see on a 5-minute chart, when the VIX starts going up, that means that there's going to be a lot of selling, right? So have that be one of your indicators. Also the VXN, which I think is this is the NASDAQ's volatility index. If we look at this on a daily chart, it looks like that big move, right? Because this was the market correction. It looks to me like it has come to pass. There might be a little bit more volatility, but we'll have to wait and see. If these indexes start going up, that's a very, very bearish sign, right? That basically, it means get out, and get out now. But for supply and demand, this is extremely important. I recommend watching this kid's channel. His name is Carmine Rosado. This kid does a lot of videos about supply and demand zones, how to properly draw them on the charts, how to identify them. Supply and demand trading recap, the difference between support and resistance versus supply and demand, right? Support and resistance is important too, but let me show you what I'm talking about here. Ever since I started using Rosado's supply and demand strategy, I have been profitable now for 7 weeks day trading. So you can see I have a bunch of zones. Let me go to the 4-hour chart because it makes a little bit more sense. I have a bunch of zones here, right? 4-hour supply, 1-hour supply, 15-minute supply. And this is how I've been trading in between these zones, right? I mean, you can see it. This is Apple. I'll just show you an example here. Let's look at Friday, right? It's a period of consolidation followed by a strong move to the downside, right? Retail traders cannot make that happen. Retail traders, they're not buying enough to make those kind of moves in the market. Only institutions can. So when you see some consolidation with a strong move to the downside, that is a supply zone, right? And I just put a pink box around it and I label it. And you'll see how the supply zones, they can be broken, right? They can be invalidated, but while they're valid, while there's big sellers at a certain price, you will see a strong move to the downside. It's the reverse with a demand zone, right? With a period of consolidation followed by a move to the upside, that's a demand zone. And you can see here on the last day, the very last few hours on Friday, trading Apple, the stock was trading in between supply and demand. I mean, it works like clockwork. We charted this over here, right, in the middle of the day. And by the end of the day, right, that supply zone held up and the stock fell from 107 down to about 106, almost 105, right into demand. All right, so I'm going to be, watching Apple to see what happens next week. But I definitely recommend Carmine Rosado's YouTube channel if you want to find out more about supply and demand, because that is the way to trade. Indicators are cool. I do use indicators a little bit. I like the VWAP. And I support and resistance is important too, but supply and demand is really what moves the market. I want to invite you guys to follow me on Twitter at Marlo_Charles. I also have a blog. The links are in the description below. The blog is cmcbroadcasting.wordpress.com if you want to read today's show notes or find the links, for anything that we talked about today. So let's just go through some news and then we'll look at some charts, okay? Flowers says, I'm afraid to day trade, but I have been investing. That's good. That's fantastic. We all need to be long-term investing, have a long-term account long before we get into trading. I'm working on a couple portfolios myself. I bought 6 shares of Apple in my WeBull account. I had like a pretty big portfolio with a nice, variety of different stocks. And I bought 6 shares of Apple, planning on buying more. If it drops to 95, even better. I'll get it for cheaper. But I'll go over my portfolios in a little bit here. So with Apple, right, you've got the new Apple Watch that's coming out. A lot of people criticize Apple because they say, well, their products aren't groundbreaking anymore, right? They're not coming out with anything super new or fresh. And that's kind of true. But I think we just need to give it time with Apple, right? Apple now has like Apple Movies, I believe. And, they have their podcasting platform, their music platform. They're getting into movies. They're getting into actually producing their own content, kind of like a streaming service, I believe. And, Apple, I think they have something coming out like Apple Car. Apple is going to be doing a lot of things long term. And Tim Cook, maybe he's not the most innovative CEO that Apple's had, but he is milking profits for all. He's milking Apple for all it's worth. I think the new like 5G Apple phones, you have to pay like $25 extra a month for some of these services. So they are really milking profits for all they're worth. And Apple has a cult-like following. I will still be buying Mac computers in the future. I'm sure I'll buy another iPhone at some point in time. So though Apple isn't, they're not completely releasing anything super, groundbreaking yet, I think eventually they will. Now, when talking about their stock price real quick, like I said, Apple went through a huge market correction the last few days. The last week or so. I do believe the next... okay, so there's a couple things here, right? You notice there's a gap around, July 31st to August 3rd. There was a gap, right, where the stock price gapped up. It gapped up from about 106 to 108, right? And these are pre-split numbers. I forgot exactly how much it was before the split, maybe like 300, 400. I forgot exactly. But there was a gap. Well, Apple filled that gap on Friday. All right. I had a big feeling it was going to do that. I got a little squirrely in my trades. Didn't quite take advantage of the downward trajectory as I could have. But the point is Apple did close that gap. Well, there's another gap that is probably going to get filled. Don't be surprised if it does. We've got that price point back from, that was just a day earlier, right? That would have been July 30th to July 31st. It gapped up from 96 to 102, right? That's like, what, a $6 gap up? So that's a little concerning just for the stock price in general. I believe Apple, if it doesn't go back up, it's going to fill that gap. It's probably going to find support in this demand area of about, 90 to 92 or so, 93. Apple may on Monday come down almost to like 100. It might be like 101, 102. it's like there's buyers, right? The big institutions are taking profit right now, but there's a lot of buyers for Apple. But I do think that the institutions are going to bring this price all the way down to 100, if not lower. And that's not that I'm bearish on Apple. Remember, I have Apple calls for October. I do think it's possible Apple goes back up in a week or so. But I'm anticipating more of a bloodbath this week. I could be wrong. So, all right. Let's talk about Facebook. Facebook is always in a world of drama. I don't want to say trouble, but there's always a lot of drama around Facebook, right? Now you've got celebrities like Selena Gomez and Jennifer Aniston. They're calling on, as if anybody cares what these celebrities are so desperate because they can't really be celebrities anymore because everything's shut down. Like California is literally burning down to the ground right now. And these celebrities, these cheesy, corny, cringeworthy celebs, legacy celebs, are just begging for attention, right? They're just like, please notice me, talk about me, put me in a headline. These people are pathetic, but Selena Gomez is demanding that Mark Zuckerberg, censor more on Facebook, right? Facebook is already censoring people to the point where all you're getting is propaganda, and they want more censorship, right? The celebrities want more censorship. This headline has Selena Gomez and Jennifer Aniston urge Facebook to crack down on misinformation. Oh my God, somebody has a different opinion than Mark Zuckerberg or a different opinion from the mainstream media. We need to shut it down. So these people are, I feel sorry for them. They're living in sin, and their, home state is literally burning down to the ground. But, these are very, very apocalyptic times that we're living in. I mean, these are biblical times that we're living in, no doubt. But Facebook, you've got headlines like from the New York Times 2 days ago, Facebook has been a disaster for the world. Don't get it twisted, right? From Bloomberg, Facebook accused of watching Instagram users through cameras. Now, I don't doubt this at all. But the point is that, for all this bad publicity, bad press and stuff, Facebook has the data. And they've been collecting data longer than a lot of them, right? Maybe not longer than Google and Apple, but Facebook, Mark Zuckerberg, they've been collecting data for a long time. And remember, data is going to be the new gold. I want shares of Facebook. I'm waiting for Facebook to fill this gap right here, right? There's a gap between about 230 and 250. As soon as Facebook fills that gap, I'm buying 2 or 3 shares of this. All right. And it's not that I particularly like these people or agree with a lot of the things they're doing. But for better or for worse, whether we like it or not, it's companies and CEOs like Facebook and Mark Zuckerberg. They're going to change the way we live forever. And these are the companies of the future. There's a lot of interesting up and coming companies, right? Like in the EV market, in the AI market, in the robotics market, and, genetic engineering and all this there's a lot of interesting stuff that's up and coming. But Facebook, Apple, Microsoft, Amazon, Google, these are the companies that are already established that are going to be here 100 years from now. All right. And so, for all the bad publicity that Facebook has, and this should prove to you right here that they're collecting the data. They are going to be profiting off of, you and I's data. Right? So we may as well get a piece of that while we're here. Facebook accused of watching Instagram users through cameras. I mean, this stuff is getting creepier and creepier with every headline that comes out. Another company that's interesting is Workhorse. All right, and I want to talk a little bit about Workhorse because I made 30% on my Workhorse. All right, let me see if I can. It's in here somewhere. Trying to figure out which one it was. Doesn't go by the date. I made it was like 33% that I made on Workhorse. Let me go to this month. Yeah, so it was like a $41 gain, but you got to understand, I had 5 shares of Workhorse, right? 5 shares of Workhorse. And also like my NEO and a bunch of stocks, a bunch of EV stocks that I had. I saw like a 30% gain on my 5 shares of Workhorse. And I really am, I'm concerned about this because what comes up must come down. So I actually did. I got out. I got out of Workhorse and NEO. I took my gains and I went and bought Apple. Why? Because Apple is already established. Workhorse has a lot going for it, right? They're probably going to get at least a portion of this $6 billion USPS contract to build the new, electric or the new green energy friendly USPS trucks. But a lot of this is speculation, all right? The share price could go to $50. Now, if we get a pullback on Workhorse, if Workhorse, let's say, goes down below 25, I will be very interested in buying Workhorse again. We do have some kind of demand zone here. You can see an area of consolidation at around the $23 mark, the 23 to it's about $23 mark. Yeah, there's a period of consolidation followed by a big move to the upside. If Workhorse were to pull back under $25, I'm going to get back in. All right, I was in probably over here at $18. But when I saw that 33% gain on by Friday, it spooked me, right? So I sold my Workhorse shares, and what did I do? I went ahead and bought out. I sold Workhorse and NEO and a few other stocks I had. Helion, that's another one, SHLL, Helion. I sold that and I bought 6 shares of Apple because I don't know about Workhorse, right? Workhorse, it could just be a big bubble. It could be a lot of hype. I'm nervous about that kind of stuff. With Apple, I know that company is going to be here 100 years from now. And I had an opportunity to get in under $110. So I did. All right. But definitely keep your eyes on companies like Workhorse, Helion, or ticker symbol SHLL. I think Lordstown Motors is another one. Clean Spark Energy, the microgrids and stuff. These are really good companies to watch. If you want to invest in them, I'm going to probably invest back in them a little bit. But I'm going to be careful because I do think there's a lot of hype out there around these initial public offerings like Snowflake. And I think there's people out there that are really going to be hurting and they're going to be losing a lot of money on these, bright, new, shiny objects that are dangled in front of our eyes. Let's talk about oil real quick. So oil prices may go up soon. Right. The main reason I'm bullish on oil is because the way I see it is you're not going to be able to run a global economy without it. All right. It is in my opinion, it is a leftist pipe dream to assume that oil is going to become obsolete in the near future. Right. That's my opinion on it. So I'm investing in ExxonMobil. It's in my long-term portfolio. I do have a long-term portfolio on TD Ameritrade, but I'm transferring a couple of accounts, my Ally account, and I was trying to transfer my Robinhood account. That didn't work out so well, but at least I got my Robinhood account back. Robinhood actually closed my account because I wanted to transfer my stocks to TD Ameritrade. But basically, I'm trying to consolidate everything to one area, which is TD Ameritrade, so I can day trade in one account, and then I can easily just go into my other TD Ameritrade account and set up my long-term portfolios. But I'm also investing on Robinhood. I'm investing on WeBull. If you're interested in downloading WeBull or Robinhood, I have links in the description down below. Use my link if you want to get these apps because you'll get free stock. I'll get free stock. And it's a pretty sweet deal. I've got a couple of free stocks on the way, actually. I think it's Levi and USB. They're like $12, $13, $14 stocks. I will sell them and probably get something else. But it's a pretty sweet deal. So, the long-term portfolio definitely should be the main strategy. But when it comes to day trading, this supply, I might even day trade Workhorse, the supply and demand zone stuff. I mean, this is very, very real, right? I charted a demand zone on Workhorse the other day, and you can see the stock went up, and when it came back down towards the demand zone, it bounced off of it not once, but twice. And then when it opened up, I guess this would have been, we'll say Thursday, Workhorse went up, went to the moon because there's a lot of demand, right? You can see these zones. So, just to sort of recap on that strategy, okay? Supply and demand. How do I get out of this? Hold on a second. How do I get out of the pen? Supply and demand. Here we go. It's a period of consolidation. A lot of times it's during pre-market, followed by either a big move to the upside or a big move to the downside. If you're going to day trade, watch those Carmine Rosado videos and learn about supply and demand. I'm telling you, it's not a course. I didn't buy a course. I'm not in any signal chats, but I watched these videos, and since I incorporated supply and demand in my strategy, I've been profitable ever since. Another example would be Boeing, okay? Boeing trades in ranges, and you can see we're right in between supply and demand with Boeing. As soon as Boeing hits this demand zone, it goes up, and when it hits the supply zone above it, it goes back down. And yes, these zones are invalidated sometimes, and you have to redraw them, and you have to make sure they're fresh, but trading with supply and demand has absolutely been a game changer. I have been profitable for 7 weeks in a row now, going on my 8th week. It's been almost 2 months since I've had more money than I had, the week before or the month before. And it was very hard. It was very tricky for me to get into trading and overcome this learning curve. But this has been the best strategy, I think, by far, right? It's not perfect, but it gives you the most, it gives you the most probability behind your trades. So, the long-term portfolio, definitely something I will talk more about. I'm investing on 3 different platforms: TD Ameritrade, WeBull, and Robinhood. The WeBull account is going to be for more speculative growth companies. You can see I kept my 6 shares of CleanSpark. I want to add to my Upwork. And so I'm going to be focusing on tech growth, not so much on dividends, but I do have Apple, which is a dividend stock. Not quite a dividend aristocrat, but they pay a nice, handsome dividend, and it'll probably grow. So at least I've got 1 dividend stock in my WeBull portfolio. And then my my TD Ameritrade and my Robinhood portfolios, that's going to be mostly dividend, okay? So I'm investing in oil, ExxonMobil, Chevron. I like the communication sector, like AT&T. AT&T pays a very nice dividend. Also real estate, right? MPW, IRM. If you're looking for REITs, MPW is a great REIT, and it had a nice, a nice fall to the downside. This is the time you get into stocks, right? You don't get into them when they're at their highs. You get into them when everybody else is getting out, right? I think it's Ray Dalio who says, trading and investing, you have to go against the consensus and be right to be successful, and that's very hard to do. But same thing with Iron Mountain, right? People are piling out of Iron Mountain. Well, I see this as a buying opportunity. It's under $30. It's undervalued at $30. It's even more undervalued at $28. So that's about it for now, guys. Thank you so much for joining the broadcast. I hope you guys have a fantastic rest of your evening here on Sunday, and happy trading. Try not to trade with emotions. If you're going to get into investing, make sure you're making good decisions for the long term. And we'll keep our eyes out for any future market correction this week. I do think we have a little bit of a ways to go. But in general, let's hope the market rallies between now and December at some point. And let me know what you guys think in the comment section down below. Where are you putting your money? I always enjoy hearing back from you guys and hearing your ideas out there. Big shout out to the chat today. And follow me on social media. We're all over the place. The links are all in the description below. Follow the podcast on Spreaker. And I think I'm going to make this Sunday live podcast a regular thing. What else? Yeah, with that, I hope you guys have a fantastic evening. This is CMC Broadcasting. God bless.